There is a new Czech National Bank regulation which will impact everyone who is interested in investment properties. Well, it was about time, because investing into real estate in Czech Republic was, I don't want to say piece of cake, but the financing options were pretty good. Not only for expats, for Czechs, for everyone. But this is about to change, because Czech National Bank is feeling like we need to regulate the market even more. And this is what we're going to discuss in today's video. What it means for you, what are the changes, and we will go through practical examples to see the real numbers. Let's get into it. You might know that in the past few years, Czech National Bank started to introduce some regulations. The regulations are, for example, 90% financing is available only for people under the age of 36. Little asterisk, because there are exceptions. So even with above the age threshold, you can still get 90%. It's just a little bit more expensive in terms of interest rate. But this is one specific regulation. Another regulation, which was very strict for a certain period of time, then they lifted those requirements, was something called DTI and DSTI. DTI means debt to income. It means the maximum debt you can get relative to your salary, and DSTI means debt service to income. By service, it's the monthly repayments. So DTI limits the total debt, DSTI limits the monthly repayments. It is easiest to calculate for people who are employees because it follows the average net salary, meaning after taxes, what you receive to your bank account. More complicated it is for self-employed people, because it depends how the bank will recalculate your specific income, and that varies from bank to bank. But going back to the regulations, because the new restrictions are going to be specifically for investment mortgages. What is investment mortgage, you ask? It's a great question, because even the Czech National Bank doesn't know precisely. Now, this is the problematic of Czech bureaucracy. They will impose some limitations, but they will not necessarily explain what qualifies as this limitation. We will go into more details. There are some terms which I already explained, such as DTI and DSTI. The last one I need to explain is LTV, loan to value. 80–90% of financing, and this is what the new regulation is about. They, Czech National Bank, want investors to put higher down payment for investment properties. Specifically, we're speaking of increase from 20% down payment to 30% down payment. This, said differently, that means LTV will be lowered from 80 to 70%, 70% loan to value. The new regulation will take effect from 1st of April, which is in less than 2 months. And it is important to realize that the mortgage approval still takes some time. So this is your last chance for everyone who wants to buy a property for investment to do it before the new regulations take place. The deadline is 1st of April. Looking at the regulation more closely, there are two important takeaways. People who want to take investment mortgages, they have to have higher down payment, and the total debt allowed per person or per family is lower. Now, we will look into the specific examples, but if you ask me whether this regulation is anyhow game-changing, I don't think it is. It will be harder for people to get more flats, and this is relevant only for people who want to get third, fourth, fifth property, but for those who want to buy their second flat, this will not have mostly any impact. Realistically, we're speaking that this will have impact mainly for investors. These are people who have 3+ properties, 5, 10 or more, and for them it will be some different story, because they have to bring down payment higher by 50%. We're going from 20% down payment to 30%, that's increase of 50%, and yes, this can slow down their acquisitions, and in theory that would lead to more people, more flats available to first-time buyers. And I guess this is the intention of the Czech National Bank. Less flats for investors, more flats for first-time buyers. I already mentioned that this rule will take effect from 1st of April. There is not much time to react, and yes, I could have done the video sooner, but for you, the takeaway is if you want to buy your third, fourth, fifth property with the old rules, you better do it as soon as possible. And I understand you might be in a choice that I am not able to buy a property, the best property I want to have for the investment, but consider whether you want to look for the best property or just accept some good property for the third or fourth or fifth acquisition, but have lower down payment. Very often in real estate investments, the down payment matters more than the purchase price. If I'm able to buy a flat which I know doesn't have a great price, but I can invest lower down payment, I will most likely prefer this over to a great deal, but I have to invest more money from my pocket. Why? Well, it's because leverage is a great tool for investments, for safe and not very much volatile investments such as real estate. Before we go to the real examples, I want to explain what is the biggest problem with this regulation, and that is the lack of definition of what is investment mortgage. Well, it should be the third and further property purchase. So theoretically, if you're buying your third, fourth, fifth property, these new rules will already imply. However, when I was discussing it with the banks, even the banks don't have this confirmed. So at this moment, we're in the beginning of February, the banks don't know whether it will be really the third property or fourth property. It will be most likely the third one. But again, there is no given specification by the Czech National Bank in terms of what about a second property? If you're buying a first flat for yourself and the second flat for investment, will this limitation already be effective on the second acquisition? I don't think so. Even though it might be obvious that you're buying for investment, it will not follow these stricter rules. This is the current assumption, and we have to wait for the banks to align to the new rules. Now, what does all of this mean in practice? I think it's the best if I show you in Excel. This is a very simple Excel spreadsheet, and we're going with a family who has a net average salary of 100,000 Czech crowns. By the old rules, theoretically, the maximum debt is 10.8 million and the max LTV, and I'm speaking for investment property, would be up to 80%. The new rules will limit the DTI debt to income to 8.4 million. You can see it's calculated by the salary multiplied by 12 multiplied by the coefficient of DTI. So there is a significant drop of 2.4 million. Similarly, the LTV is lowered from 80 to 70%. And as we said before, it's increase of your down payment by 50% relative to the purchase price. To show you on another example of an acquisition. Now, in this scenario, we have a family and they already own a property, or to make sure we trigger the investment mortgage regulations, it will be their third property. So they already own two flats, they want to buy their third one. Salary 100,000, current debt remaining on the two properties is 5.2, and by the old rules, the maximum DTI would be, well, the same calculations, salary multiplied by 12, multiplied by 9, because these are the old rules, but we subtract whatever they already have. Now, by the old rules, it means they could have bought something with a mortgage of 5.6 million. By the new rules, it's only 3.2. The own sources increased by 10%, but relatively it's a 50% increase. And the maximum purchase price, and this is the biggest change in my opinion, is that it dropped from 7 million to 4.5 million. As you see, the down payment is still pretty much the same, even though we increased the own sources from 20 to 30, but we lowered the purchase price, so that's why it ends up being the same. Long story short, it means for the same amount of down payment, you will be able to afford cheaper property. So instead of buying something for 7, you will be buying something for 4.5 million. And then the question is, can we buy something for 4.5 million in Prague? Depends, really. And this is the moment where you would be considering, okay, what about other cities? Should I invest in Kolín, Brno, České Budějovice, or maybe Ostrava? I can't help you with any other cities, but Prague, investments, and Ostrava. But no, to be more specific, we help all around the Czech Republic in terms of processing. But if you need any advisory or any comments on the property purchase price, I don't feel confident to advise about prices in Brno. not to make fun of Brno, but I don't know much about the area. However, if you're looking for purely investment property, well, all my focus goes into Ostrava. So yes, if you're curious about, okay, now I'm not able to buy anything for 7 million in Prague, am I able to buy something in Ostrava for 4.5? And a spoiler alert, yes, you can easily. For 4.5, none of our properties we ever bought in Ostrava was more than 4.1 million. So yes, even 3+1 flat will be around this price mark or even lower. So what is the takeaway from all of this? It means that investors will slow down their acquisitions. It means people who want to invest into third, fourth, fifth property have to have higher down payment, and they need to reorient themselves for cheaper properties, which means most likely the focus will shift from the major cities to something smaller and cheaper. I guess good news for the bigger cities, maybe not so much for the smaller one. And if Ostrava was overheated by investors, well, now with these new regulations, I guess there will be even more interest in smaller cities, not only Ostrava, of course, but any other city which has a good investment potential. If you're thinking to buy a property anytime soon for investment and you're within these regulations, meaning third and fourth or fifth and other property, you better hurry up to catch the old rules. When I spoke with the banks, they said if the mortgage is signed by end of March, we will still follow the old rules. I have one investor who already has 4 properties. We're buying his 5th and 6th, and we really need to speed this up because then otherwise he would have to simply invest higher down payment. I hope this video was understandable and that you know now what the new regulations are about, that the new deadline is the 1st of April, and it only affects most likely people who are buying third and fourth and other properties. My name is Robin, founder of Expats Finance, and for any information about buying flats in the Czech Republic, assessing your investment goals in terms of properties, don't hesitate to get in touch. See you in the next video.